What's up, investors? It's the Russian dude. We have some very big news because apparently the labor data, which we did receive several days ago, which was already not quite good enough. I mean, the labor market was slowing down significantly, which already triggered the Federal Reserve to start thinking about more interest rate cuts this year than previously anticipated. Potentially, we spoke about this previously. There might be even 2 rate cuts of 0.5% total in September instead of 0.25% during the very same September meeting. And long story short, apparently, once again, this data was incorrect. The situation is much worse. The labor market, apparently, the revisions came down by additional 818,000 jobs, which basically means that, well, the reality on the labor market is much severe than the Federal Reserve expected. And after the revision, the new number did not come in like, extra 1,000 or 1,000 jobs fewer. No, nothing like this. They were incorrect by a whole margin of 30%. This, guys, is a massive number to just say that it was just an accounting problem, something like this. No, 30% is a very big mistake. And yes, this is a 30% less jobs that was previously reported. Once again, previously reported number was already low enough, apparently it is even lower. The biggest downward revision came from the professional and business services, where job growth was 358,000 less than initially reported. And just to show you how big of a mistake it was, the previous number, which was reported several days ago, coming from April 23 to March 2024, the number of jobs added was at 2.9 million. Well, now it is 818,000 less. Yeah, a significant mistake to say the least. As you can see, right now the labor market started to deteriorate much faster than the Federal Reserve was thinking the situation was in reality. And once again, even with the previous numbers, it was an urgency to start cutting the rates as soon as possible. Well, now I will not be surprised if there will be some kind of an emergency meeting where they might start cutting rates either sooner or faster. Because, as you might already guys know, the two main things that the Federal Reserve Jerome Powell wants to see before they start cutting rates is first of all to fight effectively against the inflation. Well, this one is slowly budging, but budging nevertheless. And the second one is the slowdown in the labor market, which started to slow down and then it just literally almost spiraled out of control. And as always, there is a lag effect between the actions that the Federal Reserve takes and the effects on the economy. So even if they start cutting the rates right now, like literally the very next day, the actual consequences, the results, the effects might not be shown within the next several months. So once again, even if they cut rates at 0.5% during September meeting, the labor market and other market economical data might still continue to go down for the next several months, to say the least. This is a perfect example how tightly balanced and how fragile this balance between the Federal Reserve actions and the state of the economy in the United States. If you do something incorrect, if you do something way too early or way too late, this can have significant consequences on the economy itself, and it will take months to just not even solve the problem, but at least to take it under the control. So we are up for a very fun ride and by the end of 2024. As always, guys, if you did find this information useful or informative for both, please like this video, subscribe to my channel, and see you tomorrow.